There's two ways to get rid of a lender or a real estate agent. There's two questions you should ask them. If you really want these annoying realtors or lenders to stop calling you, this is how you do it. Question number one, talk about their commission. Ask them, how much are you making on me? Trust me, they will leave the room or stop calling you. Second question you should ask them if you want them to leave you alone. What are supplemental taxes? They will scatter, disappear like ghosts. The reason why, no one knows how to explain it correctly. What's going on, guys? My name is Minh with What's a Mortgage. Welcome to our channel. The goal of our channel is to educate, empower, and to connect you with the right mortgage. If it's your first time tuning into our channel, do me a favor, hit the subscribe button so you're notified every time we post a new video. Also, if it's your first time, if I bring you any value today, do me a favor, hit the like button. If you know anybody who's thinking about owning a home or if they just bought a home, this is the video you should share. We're going to talk about supplemental taxes. All right. So before I get into supplemental taxes, remember, this is Property Taxes 101, Part 2 of 3. If you haven't checked out Part 1 yet, Part 1 is what are property taxes? Where does your property tax money go? How to calculate property taxes and tax impound accounts. So definitely, if you haven't seen Part 1 yet, definitely check it out. Especially if you haven't bought a home yet, you want to read and understand about your property taxes. So let's get into it, right? Property Tax 101, Part 2 of 3. But before we get into property taxes, there's two things you must know. There's something called Prop 13. What is Prop 13? Prop 13 will decrease their property tax by assessing value at their 1976 value and restricted annual inflation to not exceed 2% every year. What does that mean? That means every year they can only reassess your property with 2% a year increase. If your value skyrockets it, they only can go up 2%. The reason why they came up with this, because property taxes, if they reassess them on the new value every year on what it inflates to, people won't be able to afford their property taxes anymore. Okay, so Prop 13 is there to protect you, the consumer. So here's an example. On a $400,000 home, you can see that every year it goes up 400, 408, 416, 424, 433, 441. With the gradual increase, your property taxes won't change too often. Okay, there'll be minimal changes every year. So now that you understand Prop 13, the next thing you should understand is when are your taxes due? So taxes are due every fiscal year. They start from July 1st and they end June 30th the following year. For example, this is 2020. So January 2020 is when they reassess the property. Okay, it's really important that you know that. They reassess it, but for the fiscal year of taxes from July 2020 to June 2021. Okay, so if you bought your home, right, and you make your installment payment in November, it's late in December, okay? And that's for the first installment from July 1st to December 31st. The second installment is due February 1st, which is late March 10th, and that's the second installment from January 1st till June 30th, okay? So now that you know about Prop 13 and you understand about fiscal tax year, let's get into supplemental taxes. What are supplemental taxes? Supplemental tax bills are one-time tax bills which occur when there is a change in ownership of a property. The amount of the supplemental tax bill is determined by taking the difference between your new assessed property value and the previous assessed value. What does that mean? That means when you buy the property, the difference of when the owner had the property reassessed last, okay? It makes a big deal when you're talking about new construction. Remember, when you buy new construction, right, the builder got the property at a discount because they bought just the land. As soon as the home is done and you buy it, it's going to be reassessed. So when you buy a new build, typically you will have a higher supplemental tax bill because the difference will be a lot larger. So let's get into it, right? What is supplemental tax bill? Like I said, if you bought a house for $700,000 and the previous owner had it assessed at $400,000, the difference is the supplemental assessment. Okay, here's an example of that. So you bought a house for $700,000. Previous owner had it reassessed at $400,000. The difference is $300,000. That is the assessment amount. So the most important thing is for you to find out what was the last assessment the seller had the home at. Once you know that, of course, you subtract that from what you were buying it at. Once you have that number, the next step is figuring out when are you taking ownership of the property. And that's why it's really important that you understand the fiscal year. Why is that? Like I said, it's from July 1st until June 30th. So if you bought the home in July, that's 1 month. That means you take ownership in August. That's 11 months left of the fiscal tax year. That means you take the 11 months, you divide it by 12 months a year, that would give you 0.92. So pretty much for 11 months, you've owned the property for that fiscal year. So you would take the 300,000 times it by 0.92, that will give you $276,000. If you bought the home in December, that means January the following year, right, would be when you took over the property tax assessment. You'd own it for half the time. So the 300,000, you would times that by 0.5. It would be half the year. That would give you 150,000. But for this example, we're using the fact that you bought the home in July. That means it's been only 1 month since you took over the property for that fiscal year. So it's 300,000 times the 0.92 equals 276. And we're using a tax rate of 1%. If you want to know what the tax rate are in your county, in your city, definitely reach out to your tax assessor and find out what is the tax rate in your city. So here at 1%, it's $27.60. So that would be your supplemental taxes. Remember, January 1st, the property gets reassessed for that fiscal year. So that's why after the first month, you still have 11 months left of that fiscal year that the property has been reassessed. Okay, so that right there is your supplemental taxes, right? Question that people ask all the time. If I have an impound account with my lender, will they still pay my supplemental taxes? And the answer is yes, right? If you buy a home, of course, they're always going to collect monthly impounds when you make your mortgage payment. Also, they collect money for your impound account. If they collect enough money, and when they pay your impound, if there's leftover money, they will pay your supplemental taxes. Whatever they're short, that's why you get a supplemental tax bill, right? So when you buy a home, sometimes it takes months or maybe a year for them to adjust the taxes. Once they do that, they'll send you a bill. If your lender already paid the bill and there's leftover money, then they'll pay your supplementals. Whatever's left over, even if they paid it and it's short, that's what you're going to get a bill on. That's your supplemental taxes, okay? So when you buy a home, typically you will get a supplemental tax bill. Remember, it's only a one-time bill, okay? So the one-time bill is broken down to either one payment or two payments, depending on when you close escrow. Can you get another supplemental tax bill? The answer is yes. If you do any home improvement that requires permits, your property will be reassessed. One of the biggest pitfalls people make, of course, you need equity to pull cash out to do renovations, right? You buy a home. 10, 15 years later, you have tons of equity. You pull cash out. If you improve your home and there's no permit, they will not reassess your property. But as soon as you reach out and you ask for permits, the property will be reassessed and your property taxes will be assessed based on that year's market value. Okay, so be very, very careful when you're doing renovation, especially if you don't do it within the first 2 years of owning the property, right? And you wait 10 years, 20 years, the property will be reassessed with the new current value. And of course, you definitely don't want that. The second way they will reassess your property if you change ownerships. If you add someone to title or take someone off and it is not your spouse, there is a chance they will reassess your property. Definitely before you add or take someone off title to either help you qualify for a loan or you want to transfer the ownership to somebody else, talk to your CPA, talk to a trustee lawyer, talk to a lender. Do not transfer just to transfer or add somebody or take somebody off. Definitely talk to somebody, because let's say you own the house. 10 years later, you add your brother for some reason, it will be reassessed with the new market value, and then you will get another supplemental tax bill. So those are the two ways your property can be reassessed. If you want to find out more, definitely check out part 3 of Property Tax 101. Part 3, we're going to go into details and the nitty gritty regarding how to avoid getting your property reassessed and increasing your tax bill. Okay, so next thing, you only get a supplemental tax bill to adjust your home value when a qualified event triggers a reassess of your property. Remember that, right? As long as you don't trigger it, it will not get reassessed. And we went over it, right? If you do any permits, or if you do any upgrades that require permits and changing title, if you don't do that and you refinance, right, it will not increase your property taxes, right? Like I said, as long as the original person stays on, if you do any transactions, you will be okay. If you pull cash out, you're fine. As long as you don't do permits, as long as you don't do upgrades with permits, okay? So remember, your property taxes, right? It's assessed January every year. So this is 2020 as you're watching this video. So January 2020, your property was assessed, okay? And that assessment is for July 1st, 2020 till June 30th, 2021. Why is that important for you to know? That will determine how many supplemental tax bills you're going to get, okay? And this is where people get confused. But here on What's a Mortgage, we help you understand what's a mortgage, right? So, will you get 1 or 2 tax bills? And this is the answer. If you bought your home from July 1st to December 31st, you will get 1 supplemental tax bill. Why is that? Remember, January that year, your property was assessed, okay? From July 1st to June 30th. So if you close escrow from July 1st to December 31st, right, you are meeting the needs of that fiscal year. If you close escrow from January 1st to June 30th, right, don't forget that's from the previous year, fiscal year, right? So you'll have that fiscal year. And remember, January, it gets reassessed again from July. So that's why you will have 2 supplemental tax bills. Let me explain it one more time. If the year, every year, January 1st, your property gets reassessed for July 1st till June 30th. Okay? So if you buy a home from July 1st to December 31st, that meets that full fiscal year, okay? But if your property is assessed January 1st, but you close escrow from January till June, don't forget you have the prior fiscal year and you have the new fiscal year of property taxes. That's why you would have 2 supplemental tax bill, okay? So hopefully that right there explains supplemental tax bill. You understand now how they calculate supplemental tax bill, if you're going to get extra supplemental tax bill, and how to determine if you're going to get 1 bill or 2 bill. Guys, hopefully that video right there gave you a lot of value. If it did, do me a favor, hit the like button. If you know anyone who just bought a home, they're probably going to get a supplemental tax bill, share this video with them. If you know anyone who's in escrow who are going to buy a house, share this video. You don't want them to have a surprise, and you don't want a surprise, all right? Guys, if I brought you any value today, do me a favor, hit the like and subscribe button, okay? Also, we want to end all our episodes is our attitude is gratitude. Without you, there would be no us. Thank you guys so much, and have a great day.